All right. Good morning, traders. Those of you watching on YouTube, welcome to Price Plan Profit. My name's Melissa, and we're going to get started with a live session on how I prep for the mornings. Good morning, Seven Picos, Pam, Jim. Prosper Jim, all of you. Thanks for joining me. So let's get started. The first thing I do every morning is I want to know what planned economic data is coming out for the day. I don't trade or stay out of trades based on this planned data, but I do want to know when I can expect volatility in the market. So for today, I can see at 8:30 a.m. Eastern time. So in about 30 minutes, we're going to have core PPI come out and unemployment claims. Red folders on the Forex Factory calendar mean these could be big volatility events. Then after that, we also have some Fed speakers, mortgage delinquencies, natural gas storage. At 1 o'clock, President Trump is scheduled to speak. This could definitely bring some volatility to the market. And then at 2 p.m., we're looking at Barkin. Fed member Barkin will be speaking. Once I know what economic data is coming out, the next thing I'm going to do is ready? I'm going to look at my watch list over here. You see it on the left hand column. I want to look at ES, the NASDAQ, as well as the Dow, just to get an idea of what's going on in the indexes. And this morning, they are flat as a fiddle ahead of that planned data. So, nothing really to glean here from the pre market price action. Basically, overnight, prices just stayed flat. After that, I want to take a big picture look at the market, starting with the ES. I look at the weekly chart just to see where we're at. Of course, yesterday we made a new all time high. We got above 6,500, barely by a couple of ticks. And I know where my demand or where my support is on the weekly chart. I like to know where the 9 EMA is at as well on each one of these charts. Then I step it down to a daily chart. And I can see here there's not much that is different. The 9 EMA on this daily chart is at about 64.30. Then I have demand down here at 63.96 by 63.69. And of course, other zones below as well. Looking at the 4-hour chart now, I'm looking to see on these smaller time frames, have we made any inside candles followed by a down candle? You know that the candle formation, if I could only trade one candle formation, it would be the inside candle. And on the 4-hour chart, we have no inside and down candle structure. We do have inside and up candle structure that was created Tuesday night, and then Wednesday, yesterday, we came down, touched that level, and buyers stepped in. So that level is 64.66 to 64.55. Below there, though, we have a very nice looking demand zone because of the move out of this zone, and we have not come back to test this area. That's at 64.02. So, important level for me to pay attention to if we get a dump in the market. I would be expecting buyers around that 6,400 level. After that, I go to a 2-hour chart. This chart, every single chart that I make, I think about what am I creating this chart for? Well, in this instance, I'm creating this chart to day trade off of for today. Okay, so then after I consider what the purpose of the chart is, then the first thing I'm going to look for is targets to the downside and targets to the upside. So let's start with the downside target. Remember on that 4-hour chart, the inside and up candle formation that yesterday we came down to test? Well, you can see it here on the 2-hour chart as well. So that's the first area that I'm going to mark on this chart. Now, remember, yesterday we came down and tested this area, and fresh zones are best zones. So for now, I am not going to make this zone green, which normally on my charts I would have a green zone and a red zone. I'm going to leave this one gray just because it has been tested, and on a larger pullback, price could break below this zone. That means for me, if price comes down to this zone, I would be waiting for that confirmation. Now, if I go further down to the left and I look at my trendy edges, I look at candle structure for this week. Notice I have this week, Monday through Thursday, pulled up on this chart. You see this structure right in here? This is an inside and up candle formation on the 2-hour chart. And if I were just normal, like normal, putting this zone on here, I would use 6404. Remember, that's an important level on the higher time frame charts. But because I have a trendy edge just north of here, I'm going to bring that zone up to incorporate that trendy edge. Then I'm going to mark the bottom of that zone. I'm going to box that in, and that's going to be my green zone for today. So I know that up here at 64, 68 and a half, that was a zone that buyers stepped into yesterday. And my green zone is going to be all the way down here to that untested zone. All right. Now, if I'm looking for upside targets, and I've already said we do not have inside and down candle structure up and to the left of price, we do have the all time high there. So I'm going to mark that. There is no red zone on this chart. All right. Why? Because no candle structure, no red zone. That means I need Fibonacci extension targets for some further upside targets. Now, depending on the amount of time I want to be in the trade would determine how much of this range I run Fibonacci extension targets from. Well, I want to be use this chart for day trading. So I want a typical 1 day move, not 1 week move. I would not measure the entire range of this week. Rather, I'm going to measure the range of the low yesterday to the high, all time high, and high yesterday. And that is going to give me some Fibonacci extension targets. I like to put a line kind of in between that 236 and 382 extension target. Then I like to use the 618 extension target and, of course, the 100 extension target. So that's going to give me 3 extension targets up and above the all-time high, and these would be targets to the upside. Now, what am I looking for on these targets to the upside? I am not a trader that calls a top. It just does not happen. If price comes up to, let's say, 65.15 and we start making lower highs, we get a trendy turn signal up here, that is an opportunity for me to scalp price back to the downside. All right. But I'm not just going to blindly short because I think the market has to go down. The market does not care what we think. It does not care what we think. Okay. So focus on the price action. Look for confirmation signals that a top has potentially been put in before you consider shorting from an extension target because you think the market needs to come down. All right, now up next, I love using Fibonacci. So the first Fibonacci I'm going to mark on this chart is this week's range from the low to the high. And there's a few areas that always I want to know where they're at on the chart. The first area is what in the trendy room we call the bull channel. That is the 236 to the 38.2. Notice this 2 hour inside and up candle formation is inside of that bull channel. And notice the bottom is just above the bottom of the bull channel. That reason alone is going to make me widen this zone because I want the bull channel to be in that potential buy zone. All right. So I'm going to put my line right there. The next area on the Fibonacci's that I want to mark on my chart as a potential buy area would be what we call the golden pocket, the 50 and the 618 fib. You will often see price turn around in this area. And so I want that zone on my chart as, again, a potential buy the dip area. Now, I do wait for confirmation because I don't have the candle structure in addition to the golden pocket. It is simply a Fibonacci area that I believe buyers could step in. I do have a monthly edge, this purple line right here, that now that price is north of the upper monthly edge, we're expecting this to be support. So that is a confluence there. The bottom of the 2 hour cloud is just above this. So I do have a lot of reasons to like this zone for a dip buy, but my actual demand is going to be down here near that 6,400 area. Now I'm going to go ahead and put the imposter level or the 764 here on the chart. And then I'm going to remove this just to clean the chart up some. And now I have a golden pocket with a monthly edge inside of it as a potential buy the dip. This would also be used for me as a target to the downside if I'm short below the PMZ. So this zone would be the first target to the downside, right? As far as a target zone to the downside. Then this one, and finally, this one. This would require basically 89, 90 points down from where we're at right now. That would be a big drop, but anything is possible and it's good for me to have the level on my chart. All right. So, next up, what I will do, and I'm not going to do this before the economic data release, but I will do it once the PPI and unemployment claims come out. Why am I waiting? Well, simply because for me, these daily blueprints are plans that I am going to trade after the bell. All right. So my liquidity chop area is going to be set for the actual trading day, not the pre market, because I don't trade futures pre market. If I were setting this for a pre market liquidity chop before the report comes out, I would very simply use this high, this topping wick high right here. I would set that as a liquidity chop area. I am going to put it on my chart because it does represent selling pressure and resistance. Next line I'm going to put above here for a trim target would be the upper daily edge. Just put a line right on top of that upper daily edge, and that gives me some trim targets before those extension targets. Now, down here to the south, if I were looking for a liquidity chop area, I personally would use either this pre-market low right here at 64.77. That's about 16 points of liquidity chop. If you want a smaller liquidity chop, then I would use just above at about 64.80. Why? Because we have a 30-minute inside and up candle formation where we got a Momo arrow and a trendy turn signal. All right, so that is completely up to you. I'm going with the actual range of the wick high to the pre-market low down here. All right, these normally, if we didn't have that big economic data coming out, would be where I would set the liquidity chop. And you can see that we do have a trendy edge in the middle there, that daily edge mid. So this is another level that you could mark on the chart if you choose. Now, 5 minutes before the bell pops or rings, we're going to get a PMZ. But before that happens, I have a labels up top here that will give me PMZ values. All right. So I can trade this if I were trading futures pre market even before the bell rings. I was wondering why those weren't showing up. I was on 2 hour rather than 5 minutes. So right now, if you were trading futures pre market, the trigger long is 64.88 and a half, and the trigger short is 64.87.25, let's call it. Very, very, very small risk. That's because we haven't had a lot of volatility pre-market, and traders are waiting for that economic data. So once the bell rings and this PMZ goes on, it pops up on the screen, you know how to trade it. If you're in the trendy room or the SPX room, price above it's a trigger long, price below it's a trigger short. And this one indicator right here gives me my overall bias as far as what trades I am looking for. Above it, I'm looking for opportunities to buy a dip and play it to upside targets. And below it, I'm looking for opportunities to sell a rip and playing it to targets below where price is at. Now, like I said, after that data comes out, I will put the liquidity chop levels in here. But for now, this, my friends, will be my daily blueprint to trade basically everything. So I have extension targets up above price. I have my zones. These zones, I would buy the dip with confirmation. Price pulls back here. I'm going half allocation on a touch at 64.07. All right. Say hi to my mom.
Good morning.
All right. So, with that said, let's move to the NASDAQ and do the same thing. Looking at first the weekly chart, we put in a new all-time high. Here is the area I'm looking for buyers to step in. A weekly 9 EMA, a 23, let's call it 50, 23,050. Looking at a daily chart for the NASDAQ, again, all-time high. Look at this candle, okay? Right here. Yesterday on the NASDAQ printed an inside candle. This is my favorite candle structure. Right here, yesterday. That means price above today. If price closes above 23,950, we've got an inside and up candle formation. If price though closes below, then there is a potential that we will see further downside. All right, so important candle. This buy arrow is showing up right now, but it doesn't print until today's candle closes. This could disappear if we come down. You can see on that last buy arrow on August the 12th, 2 days ago, that definitely worked well. We went basically from 23,590 to a new all time high of 24,068. All right, let's look at the 4-hour chart. Again, here is the big 4-hour demand zone down here. It was tested on this wick low on Tuesday morning. We did test this zone. You have another fresh zone below there. As far as the 4-hour goes, I'm not surprised to see a whole bunch of inside or indecision candles here. Time will tell. Do we go up and test the all time highs, possibly making new all time highs, or do we come down into this 4-hour cloud, which can be a chop fest in here? Now let's look at the 2-hour. I will do the same thing. I'm going to remove my drawings and create a fresh blueprint with you. Don't have to take as much time because it's the same process, just a different name. I'm marking that all-time high. I'm looking for that 2-hour candle structure that on yesterday we came back and tested. It's just like the ES one, right? We came back, we tested that zone, and buyers stepped in. Notice on the 2-hour, this candle is not an inside candle. You simply, or I simply just change the time frame that I'm looking back and find that nice inside and up candle formation and then mark the zone accordingly. So the bottom of that zone on a 3-hour, this is that formation, is right here at 23,928 by 23,885. That is your inside and up candle formation. Again, it was tested on the NASDAQ yesterday. The NASDAQ was weaker than the ES, and we actually came all the way down and tested the bottom of that zone. Now, going back to that 2-hour chart, I want to find a zone below there that is fresh, maybe hasn't been tested, or that we have Fibonacci's lining up with it. This is an area that I am particularly interested in because of the strong candle formation to the upside. This area right in here, number one, this huge bottoming wick shows buyers overpowering sellers. Then you have a continuation candle, and it is a nice large candle. This is not an inside and up, so I do the same thing. I have that area highlighted. I'm going to go to a 3-hour, a 4-hour, a 1-hour chart till I find a nice clean inside and up candle formation. And I'm going to mark that as a zone because that would be a target zone to the downside for the NASDAQ or a buy the dip opportunity for a uh, trade to the upside. All right, so if I mark this zone, it is a wide one. That's all right. I, I can trade wide zones, I scale into them. That helps me keep my risk minimal at the top of a zone. In the case that we have a further pullback, I will add to it. And inside of this zone, I happen to have some very key trendy edges, the upper monthly edge as well as the upper weekly edge inside this zone. So I would start a position here and then I would add at these trendy edges. A stop would be a candle close below that 23,596. For me, that wouldn't be a 5-minute candle. If I'm finding this zone on a 1-hour chart, that's a 1-hour candle. Okay. Now I'm going to go back to the 2-hour candle and I am going to mark the Fibonacci levels, right? I'm going from the this week's range, which is like this. All right, so that zone and the 38.2 on the NASDAQ line up very, very nicely. So again, remember this zone is tested very much so. Even the bottom of the zone is tested. That means if I'm buying a dip in this zone, I'm waiting for higher highs. If I am trading below the PMZ, then I know the zone has been tested and I can stay in runners. On the way down to, look at that golden pocket lining up with that 1 hour inside and up candle formation. So the top of this, I'm going to make gray because it is the golden pocket. But just below the golden pocket, I have that inside and up move. All right. And that's the way I would trade it. If I'm trading this golden pocket, I know that just below I have further support and I can either add risk here. If I were trading a zone this wide, I would not be using 0 DTE. I would give myself time on a zone this wide. But I need to mark the zone as it is according to my candle structure. Now, next up, I need some targets north of the all time high, right? So, what I'm going to do is I'm going to take the move from Tuesday to the all time high. I'm going to do the same thing that I did with the ES. I'm going to put me a target here around the 23638.2 extensions. I'm going to put one at the 618. And then finally, I'm going to put one up here at the 100% move. All right. Remove that. There's my extension targets. Now I'm going to go down to the 30-minute chart and then finally the 5-minute chart. Again, waiting for an official liquidity chop based on when that economic data comes out. But if I were doing this right now to trade the pre-market, I'm going to use this topping wick on this inside and down candle formation. You can see this thing has been super choppy within this zone that it found buyers at yesterday up to this topping wick high here. So that would be the upper liquidity chop. And honestly, the bottom of this would be the lower liquidity chop for me. Or you could use this lower daily edge, which I am going to put as a level inside of this zone. Now, as far as a secondary Fibonacci, it is warranted on the NASDAQ because we had that big move down yesterday. So let's look at where from a Fibonacci perspective, this little bounce here is coming into the top of the bear channel. Important level on this relief bounce that we're trying to get on the NASDAQ right now. So I'm going to put that as a level on my chart. Then, of course, this would be the bearish golden pocket up here north of price. I want to mark that 618 there. I'm going to mark the 764, the 887. These are going to give me some potential targets to the upside above the PMZ high of 23,960. Again, don't have the candle formation necessarily of an inside and down, no red zone north of price right now, but we shall see how the day plays out. Maybe we create some supply up there. On the 5-minute, here are your PMZ values, but these will change. All right. So that gives me my blueprint for ES and NASDAQ and gives you an idea of how I create my day trading plans. So Thanks for joining me. If you're joining live on YouTube and you're not a part of the Trendy Trading Room, I don't know what you're waiting for. We trade live every single day, me and my trading partner, Trendy John. He's also my mentor that taught me how to trade the trendy way of supply and demand. So join us. Check the description below. There is a link to the room and that you can check us out 30-day trial for $7. All right. Y'all have an awesome day. And if you're in the trendy room and SPX room, I will see you live in 30 minutes.